Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about Microsoft, our Clarity Spotlight last week. It's a great example of how Wall Street and institutions manage uptrends when they get into all-time highs. We're going to talk about where demand really took control and why we've seen such an advance mature to the point that it has without a backtest. We'll also talk about what a disciplined next step would look like if Wall Street's goal is to keep this campaign durable and keep the trend going. We're going to start with this weekly chart from May. In April, we saw price drop quickly down beneath all of the lows from this reaccumulation range right here. We believed that this was a Wyckoff spring, and we were looking for confirmation of that in May, and we got it with on volume with this big pop violently coming up out of that bottom, classic Wyckoff spring behavior. But the important part isn't this pop that we got here. It's what was left behind. If we were looking at a daily chart, which we will in a moment, we'll see a big gap that was left here between roughly 395 and 425. That gap is an inventory tool. What I mean by that is Wall Street just absorbed a lot of supply coming in here in April and turned it around. And this is right where demand fully took control right here. So what they want to do moving forward is they're going to want to backtest that to verify that all of the remaining supply has been absorbed. And by leaving that gap or those inefficiencies in the chart, that gives them the opportunity or a standing invitation to do a controlled backtest without breaking confidence or without breaking the trend. So that inefficiency is left there to allow them to choose specifically when they want to do that back test, when the tape best aligns with their goals. This is a current weekly chart last week. You can see as price broke up out of this range on volume, we see these long candles, but as it breaks out into all-time highs, you see the candles start to get smaller, volume dropping off. Although we see momentum still elevated, it's diverging. That doesn't read like an exit right here. We don't see elevated volumes that would indicate distribution. This tells us that profit is being taken. And if we look back over the past few years, we see this big accumulation structure. We see this big reaccumulation structure, but the whole impulsive wave right here produces a lot of gains, and those gains are left on the table that Wall Street needs to process. And so that's what we believe is happening here. Institutions process gains near all-time highs, maximizing their profit, but also keeping leadership intact. So think of this in terms of campaign maintenance. After years of accumulation and reaccumulation, a mature advance usually hands off to a demand check at some point. So we'll be looking out for that. We're not looking for trend change. We're looking for that back test we were referring to. We jump over to a daily chart. We can see a little more detail in here. After the big run, we see price drop down underneath these faster moving averages. See volume on that initial leg down was a lot higher than it is now as price is down underneath this 515 to 505 kind of intermediate band that has been introduced as a near-term supply. As price is testing the bottom of that supply range, you see lower levels of volume. That leads us to believe that this rhythm is setting up for a managed or measured C leg down. Think that this volume shelf right here in these former market structure tops in the 445, 450 range looks like the first level that they will test. If we do not see demand step in and support price here, if we do see supply introduced here, we might see a full gap fill at that point. So this is Wall Street's way of luring out the remaining supply that they'll want to absorb before they then continue on. If their plan is to continue on with their uptrend, they're going to want to remove all of the supply before they do. Great way to flush out all of the chasers that came in and chased Microsoft at all-time highs. Very healthy approach to processing gains and maintain the overall health of the trend without threatening the leadership of Microsoft. It's also very consistent with what we saw across all of our top-down analysis this week. Triple Qs managed into an extension in a similar fashion. IGV, the software sector, turned enthusiasm at resistance into liquidity. Apple's rebound arrived on kind of light commitment, lighter volumes, which really looks more like a probe. It looks like when confidence is being preserved, but not ready to fully engage yet. Microsoft is where all of those plans really become visible. See the strong spring, you see a mature advance, and a quality test of that will keep the campaign durable. So we'll be looking out for that. We're going to be watching closely all these tests going into the volume shelf and this pivot right here in prior market structure tops. If demand reappears clearly at those zones, we'll watch for price to reclaim this 505 to 515 area. If not, we'll look for that deeper back test to fill that gap. That's all the time we've got for Microsoft this week. No clarity this week. We'll be back to our full production, not this week, but next week. We'll see you next time.